So the number one question that we get asked as financial advisors from people who are interested in entering into our industry is really, how do you get paid? How do you generate revenue for yourself and for your practice? So all I can really speak to is the way that it works at Ameriprise, but I do know that it's a little different depending on who you work for and how they structure their industry. But the way that it works with us is we are essentially franchisees of Ameriprise Financial. So we run our business the way that we want to, but we essentially generate revenue in two ways. One way is through financial planning, and the other way is through asset management. Those are the two broad levels under which we generate revenue. Financial planning is essentially a consultation fee. We talk to clients about the complexity of their situation and how much time it's going to take for us to really dissect and analyze what they have going on and provide them ongoing advice. And that's generally a flat fee that we charge to clients. Asset management is probably where we generate the bulk of our revenues. And I think if you talk to most advisors in most practices, they would say the same thing. And generally the way that that works is just for simple numbers, if you have a client that opens up a $100,000 account and you charge, the industry average is probably a 1% asset management fee. If you break that down, that comes out to basically $1,000 per year that you would generate off of $100,000. So if you think about that in a small scope, it's not a ton of revenue, but if you think about that in large scope, those are recurring revenues that come into your practice year after year. So if you're able to go out there and really develop a large client base, and you get more assets kind of under your umbrella, ultimately that increases the amount of money that you're going to be able to make for yourself and for your practice. And the benefit to the way that the industry is structured now is that we do have those recurring revenues. It used to be very much transactional based. There used to be transaction costs and sales loads on a lot of the investments that you could purchase. Now the industry is structured very much more in that asset management wrap fee style of account. So it allows you to have a more predictable income stream for yourself and for your practice.